Let's get the bad news over and done with. Let's get the Spanish situation out of the way before we get on to some positive news today. The latest being that Spain's Deputy Prime Minister said the government, he believes the government full rescue bailout is not possible at this point in time. They met with Germany earlier in the week. How do we take this ahead of the ECB meeting next week?
This is not new news. I mean, quite frankly, since August last year, the moment Germany decided to bail out Greece, whoever else comes asking is going to get, because you can't go halfway down the road and stop. So this is just something else. So there'll be another rescue for Spanish bonds. There'll be another rescue for the Spanish banking system. There'll be assistance on the Italian bonds. It's just the same old thing all over again.
The European Stability Mechanism, that fund that's been set up, is said to only have a total size of 500 billion euros.
Well, that's not nearly big enough. But
now a Spanish bailout would be 300, plus the banking sector 100.
Print more money. I mean, it's quite clear what has been said this week out of Europe is we will do what's necessary. Now, you must remember, you always pay the price eventually. There's no such thing as a free lunch, but in the shorter term, as long as there's no inflation, central banks can print money virtually limitless. I mean, that's what happened in QE1, QE2.
And there's no inflation by any standards at this point in time.
Not at all, because there's no demand. So you only really worry about inflation when demand starts to pick up, but that's still a long way off. So in the interim, you literally can create money out of fresh air, and that's what this quantitative easing and the LTRO and all these other acronyms and operations.
Does it spur demand, though? Does it get consumers out there?
It saves the system. It puts liquidity into the banks. Because, other recessions we've had, certainly in my lifetime, other recessions were essentially because of excess demand, i.e. inflation went up, you had to squash inflation, etc., etc. But they were all demand-led type of recessions. This is the first one that's the financial system actually wobbled. So it is different this time around. It's still a recession. We've had plenty of recessions before. We will all recover from this recession as we've recovered from the other ones. But low interest rates don't get you out of trouble, whereas in previous recessions, low interest rates got you out of trouble.
Yeah, it's strange. This whole, monetary policy mechanisms don't seem to be working as they did before.
Because people have got too much debt.
Yeah. Let's focus on the local market, because, I mean, as you said, almost that record high on the Aussie.
130 or 140 points shy of the record
Who's
high.
pushing the market up? Foreigners, localists, everyone.
I don't think the local people are buying. Certainly we know the foreigners are buying our retailers, although that's tapered off a little bit. They are definitively buying our banks.
But they haven't been, on a net basis. We've seen foreign outflows.
They've been selling our resource shares.
Selling resources. We're certainly selling Anglo-American today. Anglo's share hit almost 5%.
The results were worse than expected. Not massively worse, but they were worse than expected. But I really thought a 7 PE is discounting seriously bad news. Obviously, I was wrong, because you wouldn't expect the share to fall 5% if the market truly was expecting bad news. But this is near the bottom on Anglos now. I mean, you mustn't start panicking on Anglos at this level. It's near the bottom.
Because you'd think that when we see a sell-off in the likes of Anglos, you might see the sell-off in the likes of BHP Billiton. What specifically about the Anglos story did investors kind of get spooked by?
People have lost a bit of confidence in Anglo-American, specifically around Amplats. The beer sales weren't good. And of course, you got the Los Broncos project in South America that's taking a long time to deliver. But the biggest, that's why people have lost faith in Anglos relative to Billiton. Of course, they're all suffering from a fall off in commodity prices. I mean, that's the main reason why Anglos is down. And Billiton will be down as well, just not to the same extent.
But Cynthia Carroll, at pains today to point out the fact that on a longer term basis, the fundamentals are sound. She's saying, just in the presentation, $10 trillion expected to be spent in cities by 2025. I mean, there's all the numbers they're putting out there.
You can make all of these stories, and you could have done the same for the last 15 years and be right. Doesn't help the share price in the shorter term. So if we could only make one decision today for the next 10 years, I don't think you'll do too badly buying Anglos. But in the next year, it might fall some more. You might look stupid. The bank shares might outperform it. So all of these things are quite right and quite true, is that the Chinese economy is going to grow still, even though it might be 7% or 8%, simply because there's very little debt in the Chinese system. The Western world is is completely overridden with debt, so they're not going to get big growth out of that. And Chinese people are going to consume a lot. The initial phase, which we've been in for, let's call it 10, 15 years now, and probably the next 10 years will be resource-based, the hard resources. But as China gets richer, it's going to be soft resources, food. And that's going to be truly
that certainly is another story around getting exposure to soft commodities.
That's also long cycle stuff. You know, it's not next week the food companies are going to run. You know, it's a 10, 15, 20-year type of things. But the market was surprised by the extent of the problems in Anglos. But as I said, I thought a 7 PE was low enough.
I know, just talking about the food space, PSG Yanni Mouton, that's one of their big strategies right now, getting exposure to agriculture.
On the long term, and of course that truly is the growth for Africa. It's not resources, it's actually food.
Let's talk about ABSA and the results that we saw out today. The share price was up by 3% at the close of trade. Sitting back, I mean, pretty much in line with what the market was expecting, but you're just seeing the impact of the fact that they didn't take enough provisions, and that's fed through to the earnings now.
Undoubtedly, someone got something wrong at ABSA for whatever reason. They did not take enough provisions. I mean, you take Nedbank's results, what were they, up 20-odd%? Yeah. And ABSA's down 8%, and these are roughly banks operating in roughly the same type of environment, book, etc. They're not radically different, all of our banks. So we'll see when FirstRand reports, they'll probably also be 20-25% up. Now ABSA did actually make some error for whatever the reason. And of course, the speculation will be around for a long time still as to why they didn't provide for this, but it doesn't matter. The share price has taken the pain on that, and it went up as much as any of the other banks went up today. I mean, all the banks went up 2-3% today.
How do we view ABSA's growth story right now in light of the fact that there isn't that first move advantage with regards to Africa? Yes. They have signaled now East Africa's in focus. I mean,
very small.
Where's the growth from ABSA going to come from?
That's one of my biggest worries in relation to ABSA, is that it seems to be a little bit behind the other banks in respect to growth, not massively. So look, the bad debt story is a one-off thing, so you can actually largely ignore that now. I mean, the banks have these, FirstRand had it, Nedbank had it, Standard Banks had it. You know, this happens to banks, you get these one-off problems, but it's ABSA's growth potential that actually worries me a little bit. But then again, it is by far the cheapest bank. I mean, FirstRand sitting at a 15 PE, ABSA's an 11 PE. So the difference in valuation is quite marked between the two.
But isn't it justified? I mean, how do you know whether that's justified or not?
It probably is justified, because I must say I would be a bit hesitant to buy ABSA now, even though it is the cheapest of all the banks. But banks go through cycles. Remember when Standard Bank was just a darling and could do nothing wrong? Then they got pounded. Then FirstRand was a dog. Now FirstRand can do nothing wrong. You know, these banks all go through cycles. At the moment, it's ABSA's turn to be the dog.
Yeah.
And
then we even had Investec at one point in time. Now Investec's back up again. So it's just sentiment-driven activity.
Earnings go through cycles. So we'll see the next set of ABSA results will be very interesting to see whether they have grown their book or to what extent they have grown their book. That'll be very interesting.
Wayne, if you had to be putting your money into the market right now, if you had to kind of look at top 3 stocks, or if you had to choose rather than a sector, I mean, where's your kind of overall buying?
My instinct.
Yeah.
My investment
gut instinct
in investments is saying resource shares are truly and utterly undervalued, but my brain says they probably haven't finished falling yet. I mean, there's just such negative sentiment against these shares. You know, let's talk Anglos, obviously, because it's in the news today. This is now sitting at a 7 price earnings ratio. That's half the market. That's 1/3 almost. It's just a bit more than 1/3 of what it was in the peak in 2007. After the crash in 2008, when the world was coming to a standstill, it got to a 7 PE, and yet it's at a 7 PE now. This is truly long-term fundamental value, but it's not going to stop the share or possibly stop the share from falling in the shorter term. So a short-term view, stick with the banks, but a longer-term view, resources truly are cheap.
Yeah, and that share price, as everyone has been saying for some time now, pricing in an Armageddon, which is not going to happen by all accounts and purposes.
And Armageddon didn't happen. Earnings fell by 30-40%. They didn't disappear. And Armageddon didn't happen, yet the share still went down.
Wayne, thank you. Thank you so much for joining us today. Wayne McCurrie from Momentum Asset Management.